How goes it, everyone? Welcome back to Dividend Compounders with Cheese. In today's video, let's go ahead and talk about Altria, one of the biggest tobacco companies in the world. And they are currently trading for about $41. Let's just go ahead and say $40 for simplicity's sake, which is near their 52-week low. And their PE ratio is sitting at 8.4. So I'm trying to figure out, are they undervalued and is it a good time to jump in right now? In this video, we are going to look at the intangibles, the finances, and run some valuation models to determine if it's a delicious or a disgusting dividend stock. I don't like the industry or the effects they have on the population on a personal level. However, when it comes to investing, if you want the best returns, it's best to turn off your personal feelings. Don't hold on to a falling stock because you're in love with the company, and don't avoid a winning company because you hate their business. There are some Android-loving folks who will intentionally avoid investing in Apple due to personal feelings. People like that exist. So even though I don't like the tobacco and nicotine industry, I can't lie. It is a lucrative cash flow business. And financially, their balance sheet looks rock solid. The thing that holds them back is I'm sure a lot of investors share the same sentiment as me. Not investing in a sin stock, a company that gives people health consequences. Let's see if my attitude towards them will change by the end of the video. So this is a YouTube channel that is focused on dividend compounders. So let's go ahead and check out their dividend over the years. So they have been publicly trading for a long time now, and they have a history of paying their dividend year after year and increasing it year after year. This is a wonderful thing to see. However, let's go ahead and take a closer look at their dividend to figure out if it's healthy, because the dividend yield is almost 9.5%. So the yield is a little scary because it's high, but it checks out because the payout ratio is less than 80%. So it seems to be sustainable, especially for a mature company. The dividend has grown by 4% year over year. Things are looking okay, and they have the history to back it up. And I'll be honest with you, the consistency of their dividend is what drew me in and what made me curious and want to investigate Altria, because I've never really been interested in the company before. But as a history nerd, once you look at their past, you can't deny that it's a dividend compounder. Okay, so we know that the dividend is juicy and it seems to be sustainable for now. But how has Altria performed over the years? So for the past 10 years, Altria has returned 121% with a 7.44% year over year CAGR. This is pretty respectable. I like what I'm seeing. So even if the stock price stays relatively flat at around $40, with that 9% dividend yield, I am attracted to them. Next, let's go ahead and look at their historical trading multiple to see if they are in line with their past. So right after the Great Recession, it looks like Altria traded at a low single digit. And as we progress through the bull market, it looks like they finally hit a double-digit trading multiple. But during the pandemic, it does look like Altria traded at a more normal PE ratio. So historically, is it safe to say that their trading multiple has been back and forth between single and double digits? Right now, their PE ratio is roughly 8.5, and that's a really low valuation. However, it's almost fair for a business as mature as Altria. Or is it? On a side note, tobacco has been used across all generations and societies, and it's strange to think, even after all these years, tobacco is still a cash crop because of the addictive nature of nicotine. So even though Altria is a mature business with little growth left, their product still has humans in a headlock. Next, we're going to go ahead and investigate and research Altria's business model and figure out if they have an economic moat. But before we do that, I wanted to tell you something a little about myself. One of my first jobs that taught me the value of a dollar was actually in a not so safe part of town. I used to work in a liquor store as a cashier, and I can verify people were buying Marlboros, Parliaments, and Virginia Slims hot off the rack. That was my first lesson as to how popular tobacco was with people. And if you think that cigarettes are of the past, they're really not. In almost every blue-collar working field, such as like warehouses, truck drivers, tradesmen, and even in urban cities, nearly every working adult smokes. It's just how it is. I don't make up the rules. And even in Europe, Asia, Africa, and all over the world, the rich and the poor are smoking. So getting addicted to using these products does not discriminate. So I grew up on the East Coast in the US, and I can say that smoking cigarettes in middle school was the thing. The rebellious cool guy thing to do was smoke a Black and Mild or a pack of Marlboros. And I remember having this irrational fear of smoking because of all of the dare presentations and guest speakers who would come and talk to us about their experience with smoking. And sometimes they would have a hole in their throat and they would tell us about the consequences of smoking. And I think that traumatized my brain to the point where I did not want to do anything related to smoking. So whenever my classmates were smoking, I always held my breath when I walked past them. And when you fast forward on this timeline, when I became an Army officer, and at the time I was an infantry officer and it was all 100% male. This was before the integration of females. Nearly all of my men used dip or chew in the field. And my NCOs used to carry only an empty bottle to meetings so they could spit their dip in it. And I'll share some more stories as we dive deeper. And with that said, let's go ahead and take a look at Altria's different brands and products. Our family of companies include Philip Morris USA, US Smokeless Tobacco Company, John Middleton, Helix Innovations, and Enjoy. Let's go ahead and take a look at each one. So when we look at Philip Morris, this is their cigarettes arm of the business. And according to Altria's research, Marlboro has 42.5% of the cigarette market share. That is insane. And when you look at the retail share, almost 50%. That means every 1 out of 2 people that are smoking a cigarette in the US most likely has a Marlboro in their mouth. And when we take a look at their US smokeless tobacco arm of the business, their Copenhagen and Skoal are the big major players, and it seems to be the most popular. And when you add up all of their oral tobacco business segments, the market share is 46.4%. Every 1 out of 2 people that use dip or chew most likely going to be using an Altria product. So not only does Altria have cigarettes and chew and dip under their umbrella, they also have a cigar company called John Middleton, and their most popular product is Black and Mild, which are those skinny long cigars that everyone likes to smoke. And what is interesting about the Black and Mild cigars is that it comes with a mouthpiece, like if you ever played the trumpet or tuba before. But this next company is really important because this is their future and where they're going towards. Enjoy is their e-cigarettes arm of the business, and this is actually really popular with people. And then of course Helix Innovations, which is responsible for On, their most popular nicotine pouch product. Let me show you what it looks like. Isn't it funny, whenever I go to one of these tobacco websites, they have to have this type of banner up at the top to show people how hazardous and harmful the product is. And even on the product itself, I would say 40% of the real estate of the packaging is dedicated to telling people how dangerous it is. So I guess this is like the Keurig type of tobacco product. Comes in little pods or pouches. But it seems to be popular with the population, and I'll talk more about that here in a little bit. So Altria's business model is pretty straightforward. They distribute all of their products to retailers, and then the retailers sell it to the customers. So when we think about their business model, does Altria have a business monopoly? Well, I wouldn't say that they have a monopoly, but they basically do. I guess you could say it's a duopoly. Their only real big competitor is the British American Tobacco Company, and they have some big brands in their portfolio, like Newport Cigs, Camel Cigs, and Pall Mall. Even though there's a lot of different brands and products in the tobacco business, it's a pretty big industry. As you can see, the US tobacco market is going to grow year over year with no slowing down in sight. So even when Altria is forced to advertise how harmful their products are up front, every year, millions of new customers are introduced into the tobacco ecosystem. It's a really sad thing to see. However, I learned in life, it's not my job or duty to judge what people choose to poison their bodies with. Some people choose to binge eat overly processed food. Other people listen to conspiracy theories all day to the point where they become deranged and whatnot. But at the end of the day, I truly do feel sorry for the people who become addicted to any of this stuff. And at one point in my life, I used to have an addiction to video gaming when I was going through a pretty bad chapter in my life. And it's such a terrible excuse to say, but it was a way to numb my mind from the realities of life. Like I used to play video games for like 12 to 14 hours a day immediately after work, sometimes even skipping sleep. But anyways, fast forward to today, even though smoking traditional cigarettes is losing steam, the customers are shifting from one product to another tobacco product: vaping, nicotine pouches, and dip like Skoal in Copenhagen. So I went to a military academy for my undergraduate degree, and let me tell you, nearly every single one of my classmates were chronic consumers of chewing tobacco or dip. It's like one of those military culture things where everyone ends up dipping by the time they turn 19 or 20. Some people even had a Christmas tree made entirely of dip tin cans. And if you're wondering what a dip can looks like, it's like that. It's colorful and it comes in different flavors. So you could have like green, red, purple, you name it. Unfortunately, or I guess fortunately, I never got to experience dip, but I did smoke a big ol' cigar after the completion of one of our training events. My roommate also smoked a cigar for the first time that night, and he ended up vomiting all night long. For me, the cigar gave me the worst headache ever. It's safe to say that we definitely did not smoke the cigars the proper way. We were young, dumb, immature, and just full of testosterone. But going back to the facts and figures and intangibles for Altria, basically here from Statista, I just wanted to show worldwide Marlboro's market share is just staggering. Marlboro, L&M, Copenhagen, Chesterfield, those are all Altrias. And this is the Tobacco Atlas. And I just wanted to show you how the smoking prevalence is declining, but the total customer base is growing as the world population is increasing. And from this graph right here, it's depicting the percentage of daily smokers. So darker the color, the more density of people that are smoking. When we look at Europe, like Russia, 28%, and Spain, 26%. Compare that to the US, roughly 14%. Indonesia sitting at 31%, Egypt at 21.7%, South Africa at 17.2%. So HDI stands for Human Development Index. So I guess that's a metric to determine how developed the country is. And it looks like 53% of female daily smokers live in very high HDI countries. So that probably explains why in Europe, almost every single one of these countries are pretty much above 20%. So this is a very interesting set of data points. The distribution of smokers. It appears the more developed your country or city is, the more likely you are to smoke. This one is very interesting from the World Health Organization. The changes in consumption. So even though the consumption per capita has declined in all regions of the world, the number of smokers has significantly increased in 4 out of the 6 regions. So it looks like smoking is increasing in Africa, Eastern Mediterranean with a 99% change, in Southeast Asia, and the Western Pacific, which regions are decreasing. North America and South America, and then Europe. Honestly, from doing research about Altria, I'm learning way too much about the tobacco industry, which I did not want to know about, but it's healthy to understand the prospects and future and forecast of Altria. So this right here is the countries with the most smokers. And it looks like the winner is China. And did you know that India is now the world's biggest populated country? And this is a fun fact that blew my mind. Did you know that Indonesia is the 4th biggest country in the world in terms of population? Yeah, I didn't know that either. But anyways, USA, which by the way, looking at this graph, the lighter shade of teal is males and the darker shade of green is females. And it looks like out of all of these countries, in the USA, the distribution of male to female ratios seems to be the most balanced, with 25 in the males and 20.1 for the females. And I guess this is in millions, so 20.1 million females. So I keep getting this paywall from Statista, so I wanted to refresh this so you can take a look at it. It's the number of smokers worldwide from 2014 all the way to 2029. Ready? As you can see, it's pretty stagnant, but it is growing. And I wanted to show that because even though the smoking age has increased in the US from 18 to 21, and there's barriers to purchase are becoming more abundant as the health implications are becoming more widely known, I know in places like Mexico, Canada, and other parts of the world, an 18-year-old can still buy a pack of cigarettes. When I was stationed in Germany, something that blew my mind was that there were cigarette vending machines almost everywhere. And I know this is a very anecdotal experience, but I remember a lot of the customers for these cigarette vending machines, that were parked right outside of the train station or bus stop. It showed me how relaxed the rules are for smoking in other parts of the world, especially drinking. And something to keep in mind is that Altria is trying to transition from purely smoking cigarettes into smokeless tobacco, moving beyond smoking, a new direction. And I think that explains why they're investing so heavily into what the consumers are gravitating towards, which is vaping, dip, and other smokeless nicotine products. At least the business leadership understand the name of the game and are aware of our society's views towards cigarettes, and they're sensitive to the changing consumer preferences. Hopefully, this isn't just lip service about how they're pivoting to a smokeless future, and they're putting their money where their mouth is because they just acquired Enjoy on June 2023. So although their organic revenue growth is slowing down from the traditional cigarettes business, they're making acquisitions to continue the cash train. So I think Altria is actually a smart company, a company that I still don't like on a personal level. So I want to try and answer that question again. Do they have an economic moat or a high barrier to entry? Absolutely. So alongside Philip Morris International, which is another really big player in the tobacco industry, and as a matter of fact, Philip Morris International and Altria used to be the same company until they split up because of dividend payment arguments and business priorities right before the Great Recession. Can you believe that? In the US, Altria is king. Internationally, Philip Morris International is king. So whenever there is competition or a new player in the game, Altria just buys them out and absorbs them into their portfolio. With all of the regulation pumped out from Congress, it's designed in such a way where no new cigarette players can join the fight. Honestly, think about it, right? Almost all of these cigarette brands have been around for decades, and they can't even spend money on advertising, which is funny because both of those variables help Altria's profitability. There's no need to allocate to risky marketing campaigns, and there's no pressure from new enemies. So this is an economic moat beyond belief. So Altria will only feel pressure from the legal implications of the age going up or in states banning certain products, and from existing beef with the other tobacco companies in the industry, which, by the way, the show Beef on Netflix is a surprisingly good watch. 10 out of 10 would recommend. I guarantee that you're going to binge watch it if you give it a try. So Altria has all of the ingredients that make up an economic moat. Their infrastructure, their supply chain, and tobacco farms. Really difficult to emulate and to get on their level. So I don't see anybody taking their place anytime soon, especially in the US. And I guess if there is a threat in their radar, they're just going to buy them out and acquire them. But as we just learned, Altria is a slow-moving, mature company that doesn't really have much growth left. I mean, yeah, they're going to grow at a low single digit year after year, but what's the catalyst in their future? So even though right now Altria is considered by everyone to be a slow-moving, mature company, and that's why they have a 9% dividend yield, when weed becomes federally legalized, the question that I want to ask you is which companies are going to be best positioned to scale that industry, the weed industry? That's the intangible we have to take into consideration. The shift from tobacco use to other forms to get a buzz or high. I don't think tobacco is going to be the end game for Altria. I think cannabis legalization is going to be massive for Altria because they are a major investor and player in the cannabis industry. I think they're just waiting for it to pass Congress and for it to be legalized. Imagine with me what's going to happen when their PE ratio goes from single digits as it is right now to the high double digits, because cannabis, once it becomes legalized, is going to be a very high growth, lucrative business. In the meantime, they pay a 9% dividend yield. Just think about it, right? Once cannabis becomes legalized, Altria has the land, resources, and farmers available to transition those tobacco crops to being cannabis farms. They have the economies of scale to flood the market with legalized cannabis when that time comes, which is going to take out all of those small startups and consolidate the cannabis industry under their umbrella. Anyways, let's go ahead and move on to the current news and events that's surrounding Altria. So very recently on February 1st, they reported their quarterly earnings. And not only that, the leadership believes the stock is undervalued, and so they have decided to do another $1 billion worth of share buybacks initiative, meaning for each share that you own, there's going to be more quality as there's less shares outstanding. And as we talk about that, let's go ahead and look at their shares outstanding over the years. So right after the Great Recession, there were about 2 billion shares outstanding for Altria. But as you fast forward throughout the years, you can see that Altria has been buying back their shares at a very aggressive rate, which is what you want to see as a shareholder because that means that each share that you own has more quality over quantity. And the biggest call out that I want to mention during this most recent earnings report is that their e-vapor business segment grew by 35%. That's not a small number, folks. That's huge. Their vision, strategy, and plan is coming to fruition. It's working. They're going from cigarettes to these different products, and it's working out. But to wrap up the current news and events surrounding the company, they do still have a headwind that they're dealing with after the effect of dishing out $235 million after the whole Juul debacle. So what happened is a lot of teenagers became addicted to nicotine because they were using Juul, the e-cigarette, and so Altria was sued left and right, and now they have to pay out $235 million. Next, let's go ahead and look at their most recent earnings presentation to see what they wanted to highlight to investors. So on slide 3 on your left side, what I wanted to call out is their EPS grew by 2.3% year over year. This is not fantastic, but at least it's moving in the right direction. And then on the right side, the cash return to shareholders in the form of dividends and share buybacks. So they are committed to the shareholder. And then on slide 10, the state of the e-vapor market. The vapor market is actually flooded with a lot of non-FDA approved counterfeits of Altria products, which are FDA approved. The total nicotine space grew in 2023, largely because of illegal disposable e-vapor products. These products are being distributed by companies violating virtually every rolling guidance in the US FDA has issued since 2016. Altria is now engaging with regulators, state and federal lawmakers to drive enforcement and to stop this. And on a side note, in the past 5 years, I've seen so many little vape shops pop up here and there in the various places that I lived. And as I'm learning more and more about the tobacco industry, I didn't know there was such a thing as having an FDA approved e-vape. Well, I guess now you know. And moving on to slide 12, the nicotine pouch volume is looking like the future of Altria, unless it's just a short-lived fad. So when you look at the demand year over year, Altria shipped 32% more of their nicotine pouch cans to meet the demand. And on slide 14, Altria launched their nicotine pouches in Sweden, which is home of Zyn. Everybody on TikTok, Instagram, and YouTube is raving about Zyn. So for Altria to compete with Zyn, it's going to be an interesting battle. And over here, I just wanted to highlight that their smoking revenue is decreasing year over year, but it's offset with the increase in Altria's smokeless categories. But it's worth mentioning because at least the company is being proactive in finding alternative sources of income. So even though this is a bad, at least there's a good in that they're shifting and pivoting. And I don't think this is a terrible thing to see from a business standpoint because at least they had a strategy in mind where they could respond to the shift in the consumer's preferences rather than just reacting later on. They already have this huge game plan that they laid out, and so they're preparing for this to decline year after year. Whereas their other business segments are going to be increasing and increasing to make up for it. And moving on to slide 22, Marlboro is still dominating the retail market share for cigarettes. OCI stands for operating company's income, and the oral tobacco segments grew by double digits, 10% year over year. And over here, I just wanted to call out, look at Altria's commitment to giving value back to the shareholders. My goodness, $6.8 billion in dividends in 2023. They also did $1 billion of share buybacks, which they're going to do again this year. They raised their dividend by 4.3%. Low key, I think Altria is desperate, but high key, this is a really good thing. They have less shares outstanding. The 9% dividend yield looks like it's going to be steady, and their debt to EBITDA ratio looks manageable. They're sitting at a 2.2 multiple. And remember, anything more than 3 is bad. So at 2.2, that looks fantastic to me. Essentially, the lower the ratio, the better it is because it tells you that the company has the liquidity and the profits to pay off its debt if need be. And at 2.2, it just shows you how solid their balance sheet is. So next, we're going to be doing some valuation models to figure out the intrinsic value for Altria and then comparing that to what the Wall Street analysts believe the price target should be. So the first one is going to be the multiples valuation. We're going to be looking at similar companies in the same industry as Altria to figure out a market-based price for them. So every single one of the companies that we are comparing Altria to are in the sin stock industry, tobacco or an alcohol player. And the median PE ratio for this industry is going to be 18. And when we take all of that into consideration, along with their current EPS of $4.57 per share, this spits out a price of $82.52 for Altria. Moving right along is going to be the discounted cash flow analysis model. Essentially, we're going to figure out an intrinsic value based on their free cash flow growth. And by the way, Altria has a very impressive balance sheet and it's heavy with cash. So when it comes to the free cash flow, what you want to see is a trend in the right direction where it's growing nonstop, or for the free cash flow to be stable and consistent. So when we take this number out, it's closer to probably like a low single digit number. However, the data says that the average growth rate of their free cash flow has been 14% year over year. But on this channel, we like to play it safe and be conservative with our numbers. So we're going to go ahead and assume that it's going to be a low single digit number like 4. So with a 4% free cash flow growth percentage, let's see what happens when we plug that 4% in alongside with some balance sheet numbers. This gives us a discounted cash flow price for Altria, $74.17. Moving right along is going to be the dividend discount model. Essentially, we're going to figure out the intrinsic value based on its dividend payments and dividend growth rate. So year over year, it looks like the average dividend growth rate is sitting at 5.23%. However, on this channel, we're going to be safe. So instead, we're going to shave and trim a little and plug in 3.8% into the formula instead, which gives us an intrinsic value for Altria, $96.88. Can you imagine what would happen if I plugged in that 5%? Actually, I'll show you right here. At 5%, then the intrinsic value would be $137. However, let's just go ahead and go with that 3.8%. And last but not least is the bear model, the Benny Graham's valuation model. We're going to figure out an intrinsic value based on the growth rate projection alongside with the current AAA corporate bonds yield rate. So with all of that taken into consideration, plugging that into the formula, this gives us a price of $49.15. So let's go ahead and figure out what is the intrinsic value for Altria. I need a drum roll, please, Jimmy. The intrinsic value for Altria is going to be $75.68. Let's go ahead and see what Wall Street has to say. So Wall Street believes that Altria should be trading for about $45.55 per share. So our intrinsic value that we reached by using very conservative and safe numbers is kind of an optimistic look into Altria. So after hearing everything, going over the intangibles, the future, the forecast, and learning about their industry, you're still interested and you're trying to figure out what is the acceptable buy price. Well, we're going to do that right now. So at its current price at about $40 and with a 10% margin of safety baked in, then your acceptable buy price is $68, which would give you a $28 discount. Now, if you buy Altria at its current trading price of about $40 to $41, then you get a margin of safety of 46%. Now I'm going to do something that I've never done before. Let's go ahead and plug in Wall Street's number right here. $45.55 a share for Altria. With a 10% margin of safety, then you're looking into buying Altria when it reaches $41 or lower. And at its current trading price, you're probably getting a 11% margin of safety. Now, if you are infatuated with that 9% dividend yield, but you feel hesitant because you feel that it's a very risky stock, and let's say that you want a 20% margin of safety baked in, then your acceptable buy price is going to be roughly $36.44 a share. But when we look at the 52-week range for Altria, their 52-week low was $39.07. So if you're waiting for a 20% margin of safety, depending on their performance this year, it could happen. So what is my recommendation about Altria? Because initially I was drawn to their dividend profile, right? Are there better opportunities and better high quality companies out there? I would would argue yes, with a lot less litigation risk and cloudy future forecasts. And if the high yield dividend is a variable that is very important, then I would probably look at a BDC like ARK or Main, or a cell tower REIT like CCI or AMT. To me personally, even though their balance sheet looks phenomenal and their finances are good, Altria and the other tobacco stocks just seem like a risky investment based on their business cycle coming to an end of the road period. The high growth and opportunities, in my opinion, were the pre-1980s when everybody had a cigarette in their mouth in the restaurants and on airplanes and etc. However, we learned that the marijuana industry is a catalyst for the tobacco players. With that said, Altria's balance sheet, dividend history, and free cash flow says that they still have a fight left within them. Even though I hate them for what they do on a personal level, I would probably consider jumping in when the price reaches the high 30s again, with a buy target price of around $39 or so. I'm not in love with the company enough to jump in right now when it's trading for about $40 to $41. I'll be honest, there's other companies on my radar that are more important. So in short, Altria is a dividend compounder with cheese. It's not decent, it's a good company, personal feelings aside. And don't just think of this as buying a stock and hoping that it goes up. My mentality with investing is the belief that I am buying into a company, a business that has real operations with a real product, and I am becoming a part owner of it. And when I think about Altria and their business model and their economic moat, it just screams that it's a good company. However, their PE ratio being single digits just tells me that the stock market is not in love with Altria. I guess I have to take back what I said of them being a risky investment, because when I think about their future, do I see tobacco, cannabis, and nicotine disappearing anytime soon? Absolutely not. I think they're going to have its place in society. It's just more of a matter of my personal feelings getting in the way. Anyways, this has been an episode of Dividend Compounders with Cheese. I will talk to you next time. Stay safe.